Michael Thorneycroft, Corporate Communications Manager at Vanguard Australia. Today we're here to discuss Vanguard Securities Lending program. Joining me is Jane Wagner, Global Head of Securities Lending at Vanguard. Thank you so much for coming in to talk to us.
I'm pleased to be here. I'm glad to be here with Michael.
Look, securities lending is obviously a lot of different things to a lot of different people. Maybe a good place to start is describing our approach.
Yeah. The Vanguard approach is a value approach. And what we do is we look for securities that are in high demand in the market and then lend those securities. Those are the securities where a borrower will actually pay a fee to borrow it because it's in such high demand. And it's a really nice approach in that we end up lending out only a small portion of the portfolio and really generating some nice revenue with just that small portion of the portfolio lent out.
And that speaks to the investor benefit. Obviously, that's what we're all about at Vanguard. So can you talk a bit more about how this program does actually benefit investors in our funds?
Yeah, and particularly with the value lending program where we're really looking for a fee, this is the type of program where it generates a fee. We're not relying on an increase in the value of an underlying security. We're actually seeing an income stream coming from the borrower to pay that fee to borrow that security. So it's a nice program for investors in that there's always a positive revenue stream that's coming into the portfolio when there's an opportunity to lend that security.
And on the other side of that coin, obviously, it's a very risk-controlled program. People may be thinking about risk when they hear securities lending, thinking about previous examples or different programs even. What are the risks associated with our program and how do we manage those?
Well, there's three general risks associated with sec lending. I don't think there's any particular risk generated with our program. The first risk is the counterparty risk, the risk that a counterparty may not return the security. How we mitigate that is we have an independent credit research group that evaluates our borrower, and then they actually put a limit on the amount that we can lend to that borrower. And in that universe, we have very high credit counterparties, creditworthy counterparties. Next is the collateral, which is the protection for the portfolio if the borrower does not return the securities. And in that, we look for very high quality collateral. And that's a big component of our program. We take high quality sovereign debt with the plan that if a borrower does not return the security, that the collateral will increase in value and we will have more than enough to basically purchase that security out in the market and replace it. The last risk that we look at is basically operational risk. And in our particular program, for this particular program, we hired JP Morgan, who is the custodian for these funds, to be the agent lender. We did that because we did an RFP, we checked all of the particular agent lenders in the market, settled on them being the best, and they have a lot of the operational experience to really monitor or run this program. We also oversee the program. They run not necessarily a JP Morgan program, but they run a Vanguard program. And so we monitor them on a regular basis. We have quarterly meetings with them, monitoring what the performance is and how they are following the parameters of a Vanguard program.
And as your title suggests, this is a global program. Securities lending is something that Vanguard's been doing for 30 years. Obviously, the Australian funds began participating late last year. So keen to hear from you how that's going so far and what investors are seeing as a benefit in these early months.
Yeah, it is still early, but we see in the first few months there's been some very nice revenue generated from some of the portfolios. There's been some great opportunities to lend out some of the securities that were in demand. We anticipate if the market continues the way it is throughout the rest of the year, that we will essentially generate some nice revenue for all the portfolios and hit some of what we were anticipating for those portfolios.
That's great. Thank you so much for sharing some of that information, especially as it relates to helping our investors do better in the long term. So thanks again for your time today.
My pleasure.
And thanks for joining us.